Hello, promoted markets. This is Ahura with the US personal income and spending report for October and market review. As always, first let's check the data and what we had and see how numbers performance, and then we can check the market reaction as well. Uh, as for PCE price and the core PCE price, both of them they printed the numbers which were in line with expectations. I mean, 0.2% and 0.3% increase for PC price index and core PC price index. They were both in line with expectation. Even on the annual scale, 2.3% PCE and 2.8% core PCE, both they met the expectations. However, as for core PCE, this 2.8% increase from 2.7% from in September. So it means 0.1%, and the core inflation, we saw the 0.1% increase compared to the previous months. As for the PCE price index on the annual scale, it increased from 2.1% to 2.3%, which means the data, they were in line with expectations. They met the expectations, correct. We were expecting these data, correct. But remember, these numbers, they confirm that inflation is increasing. That still there is a way, we can say long way to see to go through the Federal Reserve target. I mean, the 2% target. There's a 2.8%. It's far away from 2% the target of the Federal Reserve. So the increase just also, this is very important also to add that the personal income increased by 0.6% at the same time. So in October, we saw 0.6% personal income, which means the consumers, they will have more income. And when you have a more income, it means that you're going to spend more. So there is a more demand in the market. The demand is the main driver of inflation, because more demand, higher prices. That's the normal, that's the standard, what we are usually see in the market. So the demand can increase with the personal income increasing by 0.6% monthly in October. Personal spending, it fell slightly to 0.4%, but still the 0.4% for personal spending is something normal and something very, we can say, positive. Especially, don't remember that now we're going to have the November and the December. Closer to the new year is usually the personal spending increase. So the next 2 months, in the reports that we're going to have in November and December, we're going to have the positive numbers and the positive data. So we can say that the Federal Reserve will have a little bit more challenging time to decide what to do with the inflation and the interest rate cuts. With these numbers, and just an hour before that, we had the labor market data as well. The initial jobless claims increased in a week, the previous week, which was the week 47 of 2024. We had 213 applications for initials. For the I mean, initial applied for unemployment benefits. 213K. That was very that is very slow. There's very low number compared with the usual and the standard that we had around the 214, 250K. So 213K, which means it means that the labor market is really resilient, and it's really strong. And it is slightly lower than 215K printed in the previous week and market expectations as well. As if we go to the 4-week average also, the jobless claims for the 4-week average also fell to 217,000, down from 218,250 from the previous week. So generally, what we can see here in the market, that the market's expectations, the consumer expectations for the economy is positive, and the market is expecting a little bit better numbers for economic growth in the next months. Even the durable goods orders also increased by 0.2%, while the market was expecting to see 0.8% fall and drop in October. But durable goods orders also increased. Generally, with increasing retail sales that we had in previous weeks, spending, more income, inflation steady at 0.2%, 0.3%. for the PC price and the core PC price on the monthly scale, and durable goods orders increasing by 0.2%, we can say that really the Federal Reserve will have more challenge to cut the rates. That this Fed Watch tool shows the 33.5% chance for rate cuts, for not cutting the rate, for holding the rates in December meeting. But these numbers, that's for before prior the data release. Now, after the data release, we have to wait a little bit more, or something like it was like maybe 30 minutes more. Then we can see the new updates of this chart. So most probably, we can see these numbers to increase, which means that now the market participants and investors, they will give more chance for not cutting the rate, for holding their rates at the current level in December. Also, even thought if the Federal Reserve cut the rates in December, even thought if they do, more probably they're going to have the more hawkish outlook and the expectations for 2025 in the statement and in the press conference, which means the market now is not going to be expected so dovish Federal Reserve as we were expecting to be in the previous months. So if you go and check the charts and see what we had in the chart and how the market reacted to this is this is an all gold chart. Let's start with the US dollar chart. This is the US dollar. You can see the market, the dollar index, which which tested 106 mark just before the data release. Right after the data release, it started to increasing, and it can increase. At least if it's not increasing, it can hold these levels. So and in the weekly outlook, if you remember, in the weekly outlook, we were talking about this area, about area 106 and 106.90. We told that this week we are expecting to see the gold. We are expecting to see the US dollar index around between these levels, and still even thought if what we are expecting, as I told in weekly outlook, even thought if US dollar index fell to 106, between 106 and 106.90 area, this area, I thought if this level is high, it's so high compared with the 101 and 102 and 103 that we had just 2 months ago. So generally, the US dollar index is still strong. Why? Because the market pricing now on higher rates for longer. So higher for longer means more higher yields, means stronger US dollar. Even thought if it falls a little bit lower to around 106 mark, still it's a strong. And the strong US dollar put the pressure on the gold price. But as I told, that means the negative signal for the stock market. Let's go check the stock market first. That means the negative signal for the stock market. As you see, the S&P 500 started to go lower, and it can continue to the end of the tomorrow before Friday's holiday for the Thanksgiving Day. So today, Wednesday, and Thursday, most probably we're going to see the downtrend in the stock markets. And when we are seeing the downtrend in the stock market, means that the money is going to get out of the market, and when it's getting out of the stock markets, going to go toward US dollar and gold. So gold, which is under pressure right now because of stronger US dollar, cannot go so much deeper with this market condition. This is generally the data and market reaction. If you had any other question, do not hesitate to write down in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.